Hello, income harvesters, ladies and gentlemen. Welcome back to the channel, Harvesting Income Channel. If you're new to this channel, this Harvesting Income Channel is all about income investing, meaning how to make income from investments and also how to grow your income over a period of time. So, welcome back to the channel. And today I'm going to talk about another interesting covered call fund, which is again a diversified blue chip covered call fund called ECHI, and this is from the fund named Ninepoint, and this fund name is Ninepoint Enhanced Canadian Highshares ETF. Ninepoint Partners is the name of the fund, and they have been, in this space for a long time, for several decades, and they have good experience. Uh, this fund is fairly new, very new to the market. Uh, my previous video on HHIC and CANI, which was about the Canadian blue chip covered call ETFs, all in one bundle ETF. Those two were, discussed in the previous one, and there was a lot of good response. And I also thought, let me cover a few other new funds, and I will also do one comparison on HHIS and Biggie. Okay, long story short, in this video, I'm going to talk about ECHI and see how the fund works. And I'm also going to quickly, compare with the, other Canadian ETFs in the similar space and see, what we got. It's important to understand how the fund works because these are new and, fairly new to the Canadian market. And you want to monitor the performance and then decide if you want to invest or you want to invest in other similar funds which have a good track record. Okay, let's get started. I'm on the website of Nine Point Partners, looking at the details here. Okay, what I see here is they have, you know, a reasonable management fee, 0.29 management fee from March, but until February end 2026, they have zero management fee. You can see that on the middle of the left side of the screen, in the middle. So it basically is a single ticker, solution consisting of various blue chip stocks. I'm going to show that to you. Okay, portfolio characteristics. These are the stocks they hold. Just trying to bring it on the screen. They have about 10 stocks across different sectors: Barrick, BCE, Cameco, Canadian National, um, and Canadian Natural, Enbridge, RBC, Shopify, Suncor, and TD Bank. All are big names, blue chip companies, well known in the market. I don't see any, smaller companies here, and they have a very select list of companies, not too many. Um, if you look at Harvest, they have a more wider selection or a larger number of stocks. But in this one, they have 10 stocks. Probably this could change in the future. You don't know, but as of now, it's a very select set of stocks, but pretty much diversified across different sectors. Like you have financials, you have railways, you have metals like gold, uranium, telecommunications, pipelines, oil. Yeah, it's a decent and it represents the Canadian sectors, basically the metals, energy, and also financial companies. A little bit of technology as well. Okay, they are distributing monthly, dividends. Basically, it's about 15 cents per month. Yeah, we'll come to this later. So this is how the fund has been structured. Like they have the ticker symbol ECHI. You can see that on the right side of the screen. I'll just zoom it for you. And so basically, they use the underlying stock ETFs from the same fund. And the management fee is zero up to February, but after February, it's going to be 29 basis points. Okay, this is the interesting part. In the covered call strategy, they are writing about 50% of the assets in the form of covered calls. Like, so that would be up to 50%. We cannot directly, it's not exactly 50%, it could be less. So the fund has the flexibility to reduce or increase the amount of the coverage. The max coverage is 50%. So that leaves at least 50% in terms of the portfolio which is exposed to the full upside of the stocks. So which means that you have decent amount of upside potential. Okay, that's one part of it. The second part of the strategy is the leverage, which is 25%. Uh, some funds have 33%. For example, Canny has 33%, and Harvest High Income Canadian has uh, 25%, like which is similar to this one. Yeah, so that's about the basic information about the fund, and I have the fund, you know, document here. I can, yeah. So this has all the information. Basically, it says, it gives you a summary of all the information that I've already discussed. So leverage is up to 25%, and covered call strategy they do up to 50% of the fund. So that's these are the basic features of the fund. So let me quickly look at the other funds, like the other comparable funds. So you may want to know like how does this compare with HHIC from Harvest, or how does this compare with Canny from Evolve? So before I do that, a quick disclaimer. So whatever funds we are discussing here, this is only for educational purpose and for illustration purpose. We are not recommending any stocks or any funds. I am not recommending or giving any advice about the funds or the stocks. So you need to do your own due diligence. I'm just sharing the data, the information that I have, and adding my own observations based on the information I have. So yeah, do your own research and take the help of your financial advisor or consultant before making any decisions. So ECHI is what we are discussing now, but we will look at the other comparable ones, HHIC and Canny, which we discussed in the previous video. When I compare this with the other two funds, yeah, the similarity in terms of the strategy, like hold blue chip companies and write covered calls up to 50%. So it seems to be similar to Harvest in terms of the model of the strategy. Like I'm not saying the stocks are the same; there are different stocks within the portfolio, but they write up to 50%. So it's kind of design is similar to Harvest, and the leverage is 25%. So in terms of the design of the covered call levels and the leverage used, it's kind of similar to Harvest. And in terms of the yeah, it's more closer to the Harvest, model. Whereas Canny, you have like 35%, 33% leverage, and you have approximate 50%, of the portfolio return in the form of covered calls. But in HHIC, you have up to 50%. And in terms of management fee, they are charging less, like 29 basis points, 0.29%, compared to Harvest and Canny, which are at 0.40%. So that's where, ECHI is, changing the dynamics of the game. They are offering you a low cost or low fee option. And they have a promotion up to February, like where they say that management fee is free. But come March 2026, you will have to incur the management fee, which is the lowest so far in this category, like 29 basis points. I'll go to the other screen now. So this fund was launched August 22, 2025. I think just one day after the Harvest one. Harvest was August 21st. Canny was September 17th. Like it's all like coming in a row, like one after the other. So basically, I see that ECHI is acting like a low cost leader as of now, and they are also offering some kind of a promotion to attract investors. And yeah, it seems pretty interesting. The competition in the space is increasing, and that is good news for all of us. But with that good news, one thing to keep in mind is not to jump into any new fund without doing your due diligence. I always recommend you to do your own research and pick a fund which has shown some track record, so you know that they have some kind of history, some kind of pedigree that you can back on. That's the summary I would say. But before we go to the end of the video, I just wanted to quickly show you or try to look at the portfolio and also the uh, distributions. Okay, so it's a fairly diversified portfolio. You have a bit of metals, telecommunications, oil, pipelines, financial. Even though the number of stocks is pretty less, like it's only 10 stocks concentrated, but still All of them are blue chip companies, so there's nothing much to be concerned about. Okay, if I do the quick math on this, like distributions are about 15 cents. So let me pull up the calculator. So assuming like this is again kind of a assumption, like we don't know what the future will be like, and we don't know what the distributions will be like. It may go up or down, or they may cut distributions. So take everything here with a pinch of salt. This is not investment advice. So let's do a quick math on this. 15 cents times 12, that would be a dollar 80, $1.80. So if that is the total distributions we get in a year. This is estimated. Um, we look at the price of the tier. One second. Okay, let me check on Google. Okay, $11.29. Okay, this is as of December 8 right now. Okay, 11.29. Okay, so $1.80 divided by 11.29 times 100. So as of now, you are getting close to 16%, 16.94 to be precise. Uh, I think it's a decent amount of dividend to start with, and this would again vary based on the trading strategies, the market conditions, and various factors, including volatility and the movement of the underlying stocks, and so on. So as of now, it's like 15-16%. Not super great, at the same time not too low. It's a decent amount of yield you're getting. And for a core holding, this is a decent yield. But of course, there is a leverage, and you're getting, you know, smaller yield despite the leverage factor. So that's the amount of yield you can expect. Like could be around 15 to 20% range, roughly, based on what I see currently. But in future, this could vary. Um, yeah, so you have these three different options to choose from if you want to, pick a Canadian, high yield fund, Canadian high shares or all in one, fund where you want to invest in one core fund, which is a package of different companies or blue chip companies, and saves you time and effort in managing the funds. You just need to have this one fund for the Canadian market, and you're done. Like it's easy to manage that portfolio. Plus, the same portfolio is going to give you a bit of distribution plus also growth. So I think this is a great category to look into for 2026, especially for Canadian investors who want a Canadian version of the all-in-one ETF and exposure to the Canadian market in one ticket solution. So, not a recommendation, but you should also look into other funds in the same category, do your research, and hopefully we'll cover these funds once again and do a comparison and see where they stand. And hopefully in 2026 we have like more funds to choose from. As of now, we have only three, but sooner or later we are going to have more competition, and the fee also is going to come down, and we can expect more good news in the near future. So with that said, if you like what you're watching, please take time to share your comments or your thoughts, and you can subscribe to your channel and also click on the bell icon and for any updates. And looking forward to hear your feedback or comments. Thank you and happy investing.